Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend as part of our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Tuesday, April 21st. 2020, and for this analysis we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today we were down 3.07% on the S&P 500 and closed at 2736.56. What we're looking at here is a 2-month chart of the S&P 500 where each candlestick represents 1 day of trading. And the reason I wanted to start with this chart is this is the same chart we've been using for the last few days. I wanted to show you that we have broken this uptrend line that had been intact since the March 23rd bottom. So we did close beneath that uptrend line, and we also closed beneath the 2750 line. And you may remember that yesterday I warned about this, and I've been warning about this, this uptrend for several weeks now, as it just seemed like it was way too much, too fast. And of course, it is on the back of trillions in stimulus and the hope for better news about the coronavirus. So the fact that we're beneath this trend line now and also closed beneath the 2750 support level is very important. So the question tomorrow will be, does the market get back above this 2750 level, or do we continue to roll over? Nobody knows for sure, but the setup going into tomorrow is not good. Now what we're looking at is a 5-day chart where each candlestick represents 5 minutes in the S&P 500. And you can again see this 2750 line. And for today's action, you can see here that we gapped down at the open and then traded lower through most of the day and closed again towards the lows of the session, if you can see where my cursor is moving. And again, the 2750 line is this blue line here. So we did try to battle back and got above it a few times throughout the day, but just couldn't hold it. And again, we closed at 2736.56. Now, when we look over the last 5 days, what we can see is on Friday the 17th, we had that gap up, and then we had a really strong run. And you may remember on Friday I warned that this was really unusual. In about 90 minutes we moved 1.4% to the upside and closed right at the highs of the session going into the weekend, which I thought was pretty unusual. And right now that looks like a blow off top when you look at it like this. So we'll have to see over the next few days what happens, but so far that was kind of a blow off top. And then yesterday, of course, we closed towards the lows of the day. All 11 sectors of the S&P were negative yesterday. All 11 sectors of the S&P were negative today. Again, we closed right at the lows of the session, so that is not a very positive sign again. Now, for anybody that thinks that we're in an uptrend, I don't see it that way, guys. And so a couple of things. Here's our support levels real quick. Let's run through. Here's the 2750. We closed below that today, and now that we're beneath that, the question becomes, can we climb right back above it and hold this 2750 level, or will we continue to go down and get down to this 2630 level, which has been in the short term a really, really important support and resistance level? And if that fails, then again 2350 would be the most likely area that we would go to the downside. So keep your eyes on those things. Now that it appears that we're starting to get more market weakness and reality is starting to set into this market, we came way too far, too fast. So, we'll have to see what happens from here. But again, 2750, 2630, 2350, those are the support and resistance levels that you need to memorize. Now, this green line here, guys, is the 500-day moving average. I never use the 500-day moving average, but I wanted to find a way to explain the fact that this is the trend. The trend is down. This was a counter-trend move on the back of massive stimulus efforts from the U.S. government and other central banks around the world. So this was the counter trend move. This move is to the downside. We're not in an uptrend, guys. We're in a downtrend, okay? So this was a counter trend move, and now we're starting to go back in the same, at least the last few days, we're starting to go back in the general direction of the trend, and the trend is down. And one of the ways to look at this is when you look at a really long-term moving average, in this case, the 500-day moving average, what you can see here is we keep getting rejected, and I'll show you a shorter term version of this in a second. But anything, I mean, the 500, that is a ridiculously long moving average. I never use anything this long, but I wanted to find a way to explain to you that when you're underneath the 500-day moving average, if you can't even get above that, that is not an uptrend, guys. That's a downtrend. And when we look at this is the same chart, now we're just looking at a 6-month version of this, okay? So exactly the same chart, 2750, 2630, 2350 support levels. But you can see here that it's just really interesting that we got stopped exactly at the 500-day moving average on Friday's close, okay? So when you can't even get up above the 500-day moving average, you're in a downtrend. So downtrend, counter trend move, and now we're starting to roll over again, okay? So, the question becomes, will we get clear down to this, where we hit the lows so far on the 23rd? Will it go lower than that? Look, none of us know for sure. It would be really unusual for this to be the lows, right? Generally, you need at least a double bottom. A lot of times those things are separated by weeks or even months, and the second bottom undercuts the first. So we'll have to see if that happens. Only time will tell, but it would be extremely unusual, even with all the stimulus, for the first low that you make just 4 weeks into a downturn, especially something this serious. It would be really unusual for this to be the lows that you hit during the entire downturn, okay? So we're in a downtrend, can't even get up above the 500-day moving average. Counter trend has ran its course. We're now underneath this trend line. We're beneath the 2750. I mean, is it possible we could pop right back above this? Well, sure, it's possible, but it doesn't look good for now, okay? So be very careful and understand that this is a very, very dangerous market. There's problems not only with the coronavirus, guys. Even if we got great news regarding the coronavirus in the next 24 to 48 hours, this isn't the only problem out there. It is a major problem for sure, but we've got problems in the oil markets. We've got problems in the bond markets. And for those of you that haven't seen my charts for the last couple of weeks, go back over my videos for the last couple of weeks. You're going to see that we've had weakness in many global markets. Starting back in 2018, we had a lot of the markets peaked in 2018 around the world, if not before, okay? And I would encourage you to go back and look at those videos, review my videos from the last few weeks, and you're going to see what I'm talking about here, that we had weakness in the global stock markets around the world for the last couple of years, coming into where we peaked on February 19th. So this is not a great situation, and it's very unfortunate that right when we get to this point that we also get hit with the coronavirus. So we've got a lot of things going on here. This is not a good setup. This is one of the worst setups I've seen for decades, and I've been at this a long time. So be careful out there. Don't be overly optimistic. And and one last thing here for my subscribers. I was telling my subscribers to Simple Market Signals, my newsletter, I was warning them back in here that something was about to happen, because I was seeing it in my proprietary model. Okay, I didn't know that the coronavirus was going to be such a major issue. I was expecting a 10 to 12% pullback based on things that I was seeing in my model. But the point is that I spent over 20 years working on my proprietary model for my own personal trading, and then once I started working with it, I realized what I had, and I knew I could help a lot of people that were traders, also financial advisors, anybody that loves the market, whether you work full-time in the industry or you run your own money in full or part, right? You run, your own IRA, your 401k, your 403b, you trade, whatever. If you have an interest in the stock market and you want an advantage, I would highly encourage you to take a serious look at Simple Market Signals, because, again, I'd been warning my subscribers for several weeks before we peaked. So back here in early to mid-February, I was warning people in my newsletter that I felt like something was about to happen. But did I know it was going to be this bad? Of course not. But then right after things started to happen during this week, I had numerous warnings went out to my subscribers back in here where you see my cursor moving. So my subscribers had early warnings, pre-warnings that something was about to happen. Take some profits, get ready to raise more cash. So if you would like those type of advantages, take a serious look at the information I'm going to tee up next. Thank you for watching today's video. Don't forget to subscribe to this channel and please give me a thumbs up on this video. But before you leave, let me tell you a little bit more about simple market signals and how this can really help you as an investor or trader. As part of the simple market signals model, there are two powerful indicators. There's a risk-based indicator and a trend indicator. As a subscriber to simple market signals, you will receive information on what the risk level is in the overall stock market as well as what the trend direction is in the overall stock market. So this really, really helps. The way we disseminate the signals to our subscribers is via our weekly emailed newsletter. So within the newsletter, every weekend, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the early bird indicator, the trend direction signal on the overall U.S. stock market. You will have market and sector performance information on multiple time frames. You'll get market commentary and a weekly recap of what happened in the market. You'll have technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information in this newsletter every weekend. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There's no contracts. You can cancel anytime, and your first 2 weeks are free. Now let's recap what you get with your subscription to Simple Market Signals. You get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there is a major signal change or direction change, we're not going to wait until the weekend to get that information to you. We will send out a special midweek update when necessary to keep you up to date as to what's going on within the model. And the best fit for a subscriber for Simple Market Signals is somebody that has at least a 6 to 8 week time frame or longer. So if you're a long-term investor, you're going to love this. If you have at least a 6 to 8 week time frame that you focus on with your trading and investing, you're going to love this. If you're an ultra short-term 1 or 2 day trader, kind of a day trader, or somebody that trades within a week, Simple Market Signals might help you a little bit. But the reality is, the people that are going to benefit the most from a subscription to Simple Market Signals are those people that have at least a 6 to 8 week plus time frame that they're focusing on. And if you want even more information on Simple Market Signals and some of the strategies that you can use on the various signals, this is a very in-depth video that I will have linked in the description box below this video, along with a bunch of other videos that you may want to explore if you need additional information on Simple Market Signals before you subscribe. Also, keep in mind that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. And to subscribe to Simple Market Signals, all you have to do is go out to the website that you see here, https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that simple.